There was a certain fund manager who in February said that they are going to sell 37 million shares of one of, I would say, the most innovative companies on the planet, a company that's actually stopping some of the issues in Russia and Ukraine or mitigating some of the problems that exist there, to buy another company. To buy the dip on another company, because in January and February, everything was dipping. And even though it was going to dip more, they wanted to buy the dip at that moment of that company. This certain fund manager also bought 6 million shares of the same company that they liquidated 37 million shares of in February in the first 5 days of January at about $16, $18. Because like, this is a steal. Of course we should buy this stock. That fund manager is Cathie Wood. And she sold 37 million shares of Palantir in February. She liquidated her entire position after buying so many shares in January at around $11 to $12. And the reason for this, or the reason they gave to us, is that the governmental business is slowing down. Palantir just secured a $99.9 million contract for the U.S. federal government Army Research Labs for 2 years, so $50 million a year. And they also are in the midst of potentially winning a federated data platform, which is going to be about 360 million pounds in the UK. And that's going to be over the course of 4 or 5 years. So I don't think Cathie expected the government business to be what it was. But it seems like she miscalculated. And what she bought, the stock she bought as a result of selling Palantir, was Roku. She bought a lot of Roku, a lot of Roku. And it is my honor, ladies and gentlemen, to display to you what is going on. Well, first of all, let's just go here to the stock price of Roku. Let's look at it real quick. And then we'll go to what actually happened. Roku's at $63. As you saw yesterday, it was at 85. It went from 85 to 62, basically went down 25%. Now, why did it go 25%? Well, it turns out advertising and the business that Cathie Wood and her little analysts went on and said why they felt it was a better buy than Palantir isn't as innovating. Roku shares crater after company misses on earnings and warns of recessionary fears. Roku shares plummeted more than 25% in extended trading. The company missed on the top and bottom for its second quarter. So, top line earnings, loss of 82 cents per share versus loss of 69 cents per share. That was pretty bad, obviously. Revenue came in at 764 versus 805. So that's really bad. I mean, we saw like certain companies miss revenue by like a couple, like just million, a couple of dill points. I mean, I think Facebook did like 28.2 and they were expected to do 28.9, something like that. So really not bad misses. Apple, Amazon, Google, they all missed, but very slightly. I think Apple actually beat and Amazon beat. But if they beat, it was by slightly. If they missed, it was by slightly. To be down by like 45, 50 million more than what was expected, that's not good. The thing that hurt them the most, though, was their ultimate guidance at the end of the day. So a couple things. Roku added that the advertising market will continue to suffer in the current quarter and that the consumer spend will moderate, which could hurt the company's business of selling Roku TV-related hardware devices. Now, they don't make a crazy margin on their Roku TV and hardware devices, but that integrates them into your home, which allows them to get the high-margin business, which is the advertising over the OTT advertising, basically in a much better way. The company said it trimmed operating expenses and slowed head growth in the second quarter. We believe this pullback mirrors the start of the pandemic in 2020 when marketers prepared for macro uncertainties by quickly reducing ad spend across all platforms. Remember, Roku is betting that their advertising model, which I'll talk about in a second, is what's going to make them a multi-billion dollar company. I am skeptical on that, and I think most people should be as well. Additionally, Roku missed on its guidance, saying that it would bring in $700 million in revenue during the third quarter, well below the $902 million. So this is the big thing that the market was like, all right, we're not holding the stock. When you originally said, or when the market originally, thinks you're going to get to $900 million because they did all their fancy due diligence and announced like they should probably bring in $900 million, about $1 billion next quarter, and you say, actually, we're doing, only 70% of that. We're only going to do $700 million. Well, the market's like, you're going to miss by 30%. We're going to drop you by 30%. The company said the advertisers curtailed their spending on television advertisements during the quarter, underscoring how fears of a recession are causing businesses to pull back on marketing. This is pretty obvious at the end of the day. I mean, it makes sense that advertisers are pulling back their ad spend because, like, if a recession is coming, you probably don't want to spend advertising if people don't have the money to buy things because the consumer sentiment is low, because they're trying to save their money, because they're not trying to buy random stuff, because there's a recession coming. They have to save it. The problem here is the innovative model of Roku was supposed to kind of solve for this, and we'll talk about that in a second, but nonetheless, every company that relies on advertising has been, resulted in this. Meta, for instance, reported poor second quarter financial results this week, which executives blame macroeconomic certainty and weak advertising demand. Snap and Twitter also did this as well. Google's the only one that put up 70 billion in 90 days, and yes, it missed very slightly, but it means their ad business really didn't slow down at the end of the day. YouTube put in 7.34 billion, missed slightly, but they did a pretty good job. So let's talk about what this means ultimately for Roku, the stock. When Cathie Wood said we're selling Palantir to buy Roku, the logic here, and I really tried to dissect this and understand it, because I was like, am I an idiot for holding Palantir and not holding Roku? What exactly is going on? The logic here that Cathie gave, which also, by the way, says that Zoom is going to 12x by 2026, and some other stock she said is gonna like 6x. I think it was Roku. Yeah, she said Roku. I did a video on this. She said it's gonna get to 605 by 2026 as like the base case, and the bull case is like somewhere above 1500 or something. So the argument was traditional advertising is slowing down in like your cable networks, right? Everyone's cutting the cord. People don't buy TV anymore. They buy streaming services. As a result, you need an operating system. You need the toll booth for all of those different streaming systems. And that toll booth was Roku. Roku has great share in Latin America, and it's expanding internationally. Their devices are super easy. Their operating system is built for television, which is important because, you know, if you have an app store on the iPhone that's built for the iPhone, it makes more sense for consumers to be able to use it. It's more cohesive. Roku has done that for the TV almost seamlessly and has done a phenomenal job at it. You would even look at the numbers, 12 billion market cap, 3 billion in revenue last year. You would assume that they can really do well just from a pure financial perspective. But then you start to understand why Cathie's betting on it. And the argument was, if all that advertising spend that was going into like ABC and Fox and CBS is shifting, then it's going to have to shift towards places where they have the best data. And her argument was social media is a different type of advertising, but more people are going to be watching the Roku channel. That means they're going to watch TV on the Roku and they're going to be hit with those ads. And that to me was just a ridiculous reason. I'm like, so you're betting that more and more people are not going to watch Netflix, not going to watch Disney Plus, not going to watch YouTube that has the best user-generated content on the planet and search algorithms to actually get people to stay on the platform to watch what they want to watch because they're going to watch the Roku channel, which, by the way, doesn't even have that much good content. Anthony Wood, the CEO of it, said, hey, we have to start building out our own content. That was the last straw for me to definitely not buy Roku. That is another Netflix business. You have to become your own premier studio. It is very difficult to become a premier studio and buy and build your own content. Ask Netflix how that's going. It's hard to get a Squid Game every single week, much less every single year. So when Roku said the Roku channel is going to be the primary method for which people consume content, because Roku has the scale, which I agree they do have scale, and they're growing for sure. But to assume that consumers are going to watch that over the other stuff, and even if they do watch the other stuff, Roku's like, all right, we're going to take a little bit of the ads from like Hulu or from Netflix or whatever they do because we're integrated in the operating system. That's fine. I can understand that. But to me, at the end of the day, that's not the most innovative. It's not the most unique. It doesn't show the biggest shift in advertising in the world to me going to one platform. And it doesn't mean that company is necessarily going to win. Now, macroeconomic concerns means that ad spend is going down, so the stock falls off. I get it. I just don't think even when the macroeconomy gets better, that Roku is the winner, especially when they've got to create original content and get you hooked to watch the Roku. Like if I turn on youtube.com on my computer and I'm not watching Roku, bam, Roku is not getting that type of attention. And to bet that they would get that type of attention and they can sell you ads with all the other possibilities that exist, along with the fact that we don't even know if their original content is going to be any good, was ridiculous to me if you compare that against Palantir. ARK says AI is going to be an $85 trillion industry. What other company is at the cutting edge? And there's some up there, but what other real company is doing AI, machine learning, meta constellation, space crap other than Palantir? Not many companies. So if you're going to bet that a company that's helping to solve the Russia-Ukraine crisis by offering geospatial intelligence is not as innovative as a company that's helping advertisers get more reach on TVs, okay. All right, if you want to say that, then you want to say that. Those are my thoughts on Roku earnings. Let me know what you guys think in the comments. I think it was kind of ridiculous for them to sell Palantir for Roku, but nonetheless, Roku could still be a good stock over the long term. I just don't think selling Palantir for it was worth it. So those are my thoughts. Thank you guys for listening and watching. I'll see you in the next one.